Good morning and welcome to this exciting day where we talk about businesses and business all around the world. It is Business 360 and my name is Blyden Ukem. In Business 360 today, we'll look at the top stories and the talking point. We'll look at economic data and statistics as well as the stock market and the commodity markets. Our President Biden hails new security ties with Japan and South Korea. We begin from there. President Joe Biden announced plans for annual leader-level meetings with Japan and South Korea, as well as a new hotline for the allies to swiftly share intelligence at a summit with Japanese Prime Minister Fumio Kishida and South Korean President Yoon Suk-yeol at David Camp. The president spoke on the economic concerns within Asian Pacific. Let's find out more from President Joe Biden regarding this.
The purpose of the meeting, but it did come. China obviously came up. Not to say we don't share concerns about the economic coercion or heightened tensions caused by China, but this summit was really about our relationship with each other and deepening cooperation across an entire range of issues that went well beyond just the immediate issues we raised. It was about more peaceful and prosperous Indo-Pacific, a region, quite frankly, that would benefit everyone living there and around the world if we get it right.
And TikTok and Telegram over horrific content misinformation. Somalia has banned video platform TikTok, a messaging app Telegram, an online dating website, one expects, to limit the spread of indecent content and propaganda. Its communication minister said this. The order gave internet service providers until August 24 to comply. The Minister of Communication orders internet companies to stop the aforementioned and its application, which terrorists and immoral groups use to spread constant horrific images and misinformation to the public. It was activity on TikTok and Telegram. The decision comes days after Somalia President Hassan Sheikh Mohammed said a military offensive against Al-Shabaab aims to eliminate the Al-Qaeda-linked group in the next 5 months. Looking at the BRICS meeting taking place in South Africa. The expansion of the club, more than a handful of hopefuls, 23 in fact, including Saudi Arabia, Indonesia, Iran, Argentina and Ethiopia, are interested in joining the bloc. South Africa's top representative of BRICS, Anil Solkal, told U.S. economic outlet Bloomberg that leaders would draw up a statement on the expansion of the group beyond Brazil, Russia, India, China and South Africa, and that this would represent a major shake-up of the existing world order. Still in South Africa, as a country is ranked among the least preferred destination for expats. The recently published Expats Insider 2023 survey conducted by Internations has brought attention to South Africa's position as one of the least favored across 53 countries, eliminates the challenges expats encounter when they're contemplating South Africa as their prospective abode. Job market dissatisfaction and safety concerns emerge as key issues. While facing hurdles, 67% of expats express contentment with their life in South Africa. Still in Africa. The East African community is set to add on a new country that applied to join since 2012. Somalia has made an important step towards becoming the East African Community EAC 8th member. Somalia submitted an application to be a part of the East African bloc in 2012. On June 6, 2023, the EAC heads of state accepted the verification team's finding so that Somalia could join them. After nearly 10 years of conflict, Libya's central bank reunites as a single entity, according to its governor. Following a meeting with Deputy Governor Mari Mustafa Rahil and department heads from both the Tripoli and Benghazi branches, Governor Sadiq Al-Kabir made a declaration at the bank's headquarters in Tripoli. The Central Bank of Libya has successfully reunited its western and eastern branches of Khalifa Haftar in the east and the UN-backed administration of Abdelhamid Biba in the west. After being split in 2014 due to the political division, the central bank's reunification brings hope for further reconciliation across all states' institutions. In Nigeria, the US-based outfit and the financial institution JP Morgan has disclosed that Nigeria's foreign reserves stood significantly lower than the figure the Central Bank of Nigeria CBN claimed the country has. According to JP Morgan, it estimated in its recently released report that as of the end of 2022, about $3.7 billion was left in Nigeria's foreign reserves. This is significant. The decline in the foreign reserve weakens the federal government's ability to defend the naira in the forex market and support foreign trade. Although JP Morgan stated that the estimated figure was made based on partial information from the audited financial accounts of the CBN, the financial institution said the international reserves dropped by $10.3 billion or 73.5% year-on-year from $14 billion at the end of 2021. Still in Nigeria, the federal government could raise $17 billion from oil asset sale, according to JP Morgan. The federal government is expected to make up to $17 billion if it sells down its stake in most joint ventures oil and assets. JP Morgan stated this. The United States Bank's projection came against the backdrop of the government's plan to boost foreign exchange earnings and external reserves in order to ease forex financial accounts open a can of worms. Quite concerning from that direction. But regarding the Ajaokuta plant, the Minister of Steel Development, Shaibu Audu, has stressed the need to resuscitate the Ajaokuta Steel Company. During a press briefing in Abuja on Monday, Audu confirmed his commitment to restoring the moribund steel plants. According to Audu, he will set a roadmap for the development of the steel sector, aggressively pursue the completion of Ajaokuta Steel, and enact required bills to regulate the steel sector, among others. It was recently reported that the federal government allocated over 3 billion naira to cover personnel costs at the Ajaokuta Steel Company each year from 2016 to 2023. We'll go on a short break. When we return, we'll be looking at businesses around the world and the economic statistics making rounds this morning. Don't go anywhere. Welcome back. It is Business 360. My name is Blyden Okem. Looking at economic statistics all around the world, beginning with a report by Blue Putnam. The interest rate debate has changed dramatically. The chief economist CME Group, Blue Putnam, has more regarding interest rates across the world and in the U.S.
About a U.S. recession leading long-term Treasury yields to rise sharply. Moreover, the debate over future Federal Reserve policy transitioned from trying to call the peak in short-term rates to discussing the length of time rates might remain elevated, with the no recession view becoming throughout 2024 and possibly longer. Historically, 1% federal funds rates under the Greenspan Fed and then the near zero federal funds rates introduced by the Bernanke Fed are the outliers. These super low rates popularized the view that the Fed had the markets back, artificially supporting both higher equities and lower bond yields. The Powell Fed is guiding us that those days are in the rearview mirror, and market participants are starting to agree.
On quarter in the second quarter of 2023, following an upwardly revised 0.3% expansion in the previous 3 months period, and compared to market expectations of a 0.1% rise. Growth moderated for petroleum activities and ocean transport and government spending in the first quarter. At the same time, net external trade contributed negatively to the GDP as exports rose 1.4% while imports increased at a much faster rate of 1.7%. Meanwhile, rebound, which excluded the largely petroleum-based offshore sector, was also stagnant, missing market forecast of 0.1% growth, and after an upwardly revised 0.3% expansion in the first quarter. It would be a good time to move to the commodity markets, beginning with an outlook of the energy market. Energy markets are on alert for volatile weather. Energy traders are paying close attention to changing weather patterns as hurricane season approaches. Warm water in the Gulf of Mexico and the Atlantic have forecasted and have forecasters fearing excessively destructive storms. Meanwhile, gas markets are warily regarding a thoroughly underprepared EU supply situation as winter approaches. Bob Isino of Part Trading Partners has more. Let's find out.
Energy traders are starting to pay close attention to the weather as warm water in the Gulf of Mexico and the Atlantic have forecasters fearing storms could become more powerful and destructive if they develop. In addition, EU natural gas supplies are far too low for this time of year. While crude oil prices were down for the week of August 14th, prices are still up by almost 16% since the middle of June. Some of that may be due to storm risk as we move into the meat of the hurricane season in the Gulf of Mexico. Surface water temperatures are historic on the natural gas front. As summer winds down, the European Union's natural gas reserves are well under normal levels, and if they don't fill up by October, the EU could face a price squeeze if there's a repeat of last winter's cold snap. The EU has the capacity to store roughly a fifth of its annual consumption, and those reserves were full a year ago. If they don't fill up soon, natural gas prices may respond.
Talking about the energy market, Brent crude steadies as trader molds outlook. Brent crude futures steadied above $84 per barrel today after losing some grounds in the previous session as traders continue to assess various demands and supply factors. Economic uncertainties in China continue to weigh on the demand outlook as policy support measures from Beijing have so far failed to convince markets of a stronger recovery in the world's top crude importer. On the supply side, output cuts from OPEC Plus majors Saudi Arabia and Russia provided a flow to oil prices. Investors now look ahead to U.S. crude inventories figures from the American Petroleum Institute on Tuesday and official data from the Energy Information Administration on Wednesday. Let's move to the energy market and see what the price is. The energy market this morning have shown some negativity, especially for crude oil. U.S. crude, the West Texas Intermediate crude, $79 per barrel, dropping 0.1, a negative 0.24% decline. $84 per barrel is the price of Brent crude. Natural gas appreciating and coal slightly downward. Now to the other market, the metal market. The metal market has shown positivity with some level of volatility for gold. Gold price gaining 6.66 points, $23 per ounce, gaining 0.028 point, a 0.12% appreciation. Copper, a little here, little there, but gaining 0.99% appreciation. Steel price has gone up by 21 points, 3,686 Chinese yuan per ton is the price of steel. And to the industrial market. The industrial market outlook has shown positivity for bitumen, 3,916 Chinese yuan per ton. Lead is 14.5 points upward, 0.67% appreciation. $2,182 per ton is the price of lead. Aluminium gaining activity in the market regarding aluminium. Let's move to the grain market and see what the standings are. Virginia McCarthy is standing by as hot temperature help boost soybeans. Virginia McCarthy gives more regarding this.
Today in the grain market, soybeans jumped up. That scorching temperatures this week really boosted the market. The crops are going to be under some stress now, and rains did come, but they were just too spotty right now. It sent prices up about 27 cents at one point. We're trying to move closer to that $14 mark, just haven't gotten there yet. But the market, did pull back somewhat, even though it ended up higher. But it does create a gap now for fundamental technical traders. I mean, that's like as we move to the end of summer, we get some profit taking kind of moving in on that. Now, CVOL for soybeans is at 19.3%, with the oil at 30.3 and the meal at 23.6, and that's up 2.25%. Corn was a little bit mixed. They kind of ended lower. That heat index is expected to top 120 degrees ahead in the Midwest, basically from Minnesota to the Mexican border, from Colorado to Ohio. I think that the yields could come into question, even though the market ended up lower today, which was
to a market to see what the standings this morning would be for most of these commodities, soybeans and the rest. The agriculture 0.35% decline, $1,365 per bushel is the price of soybeans. The price of wheat, palm oil downward this morning by 60 points, a negative 1.52% decline. Current price for palm oil, $3,800. Time for the forex market, the foreign exchange market. Beginning with yesterday's FX updates, Russian ruble did increase yesterday by 1.27%. At number 2, the euro, a 0.32% appreciation, and the Swiss franc, a 0.31% appreciation. For the biggest losers now, the biggest losers had top on the lock, negative. Let's quickly go to the market and see what the standings are in the morning market for the euro against the US dollar, the current market, and afterwards Naira's perspective in the morning market. The euro against the US dollar. The euro-US dollar standings still remains at 1.09 according to yesterday's market and today's market. No volatility in this market, a 0.09% appreciation. For the pounds against the US dollar, it's still at 1.27 point mark. The same with yesterday. A slight gain this morning of 0.16% appreciation. Let's look at Naira's performance. He's also in the morning market. 16.36 points gain for the US dollar against the Naira at the opening of the market today. The struggle for the Naira continues. For the euro against the euro gained 3.4 points over the Naira at the close of yesterday's market, 812 Naira equaling 1 euro. And pounds to Naira, 950 Naira equaling 1 pound at the investors and exporters window. Paro market and see what the prices are in the black market. 885 Naira to equaling $1 at the buying rate, and 855 Naira equaling $1 at the selling rate. The pounds to Naira's perspective, 1,155 Naira to 1 pound at the buying rate, and selling rate 900 Naira to a euro. The disparity between which is the spread, is 35 Naira. And quickly let's look at the cryptocurrency market, what the prices are this morning. Well, the $26,033 is the price of 1 Bitcoin. Ether dropping 8.9 points, $1,662 equaling 1 Ether, dropping a negative 0.53% decline. Binance hugely downward by Solana, Ripples, all on the negative. And quickly let's look at the stock market, the European stock market and the indices in it. The European shares rise, supported by a take-late rally on Wall Street overnight. Investors are eagerly awaiting Nvidia's result and preliminary August PMI data, both of which are due on Wednesday, along with the Federal Reserve's annual economic symposium at Jackson Hole later this week. Quickly, let's look at the European stock market and afterward the African stock market and Nigerian stock market. The European stock market has been all positive from Great Britain to Germany, France, Italy, Spain, and even only Russian stock is downward by 3 points. The rest of the stock markets in Europe are quite positive, gaining. Amid positivity in the take 8 basis point index level, 65,202 index level for the Nigerian stock market. The South African stock positive this morning. The Egyptian stock EGX 30 also gaining 187 basis points this morning, and that of Nairobi slightly downward this morning. The Nigerian stock market today, what the components of this market would tell. Dangote Cement on the positive at the closure of yesterday's market. Bois Cement, no significant difference at the closure of yesterday's market. Surplus, UBA on the positive at the closure of yesterday's market, and the opening setup for the market would be up later on for us to see. Here we draw the curtain on today's edition of Business 360. My name is Bladel Kim. Thank you for being a part of it.